Let's go to the heart of it. John Casesa joins us with Guggenheim Partners. And John, I was struck there as Margaret was finishing out. Senator Schumer saying of Speaker Boehner, good and reasonable men. Does Detroit look at Washington as good and reasonable men and women?
Look, I think Detroit is like the rest of the country right now, beside itself about a resolution here. And, you know, the impact on consumer confidence, like the Michigan index is down an awful lot in the last 2 weeks. That's not good for car sales. If consumers get nervous, they don't buy big ticket items. So
and this uncertainty gauge for me, what I hear say from John Tucker on Bloomberg Surveillance on radio, this idea of uncertainty and how it folds into small business. Okay, I think we all get that. How does uncertainty fold into that 5:15 meeting Thursday morning at Ford Motor that Alan Mulally holds?
Well, I think you know, it makes everybody a little bit more cautious about adding to a production schedule because you're not sure if you're going to sell these cars, because cars a big ticket purchase, and if the consumer's nervous about making the purchase, then the manufacturer's nervous about making the investment.
At the margin, does it move investment to Mexico and to other nations?
You know, look, it's just too early to say that yet, but if what's happening is symptomatic of a structural problem with our way of government, then yes, it was investment to Mexico. I don't think that's the case. I think we just have an example of this with a very sloppy system we have right now that makes it high anxiety from time to time.
I like that. High anxiety. I think it's a movie. Dreaded first chart. Here it is. John, I wanted to get away from big three, more than the big three. And it's the auto components index, Johnson Controls and a few others. I guess it's cyclical. That chart sort of says maybe I sell the auto parts here. Do you lighten up at least? Or is there this idea they could go back to the buoyancy there of the late 1990s?
I think the auto parts business is becoming a lot better. Why? Because their customers are healthy again. For the last decade, these customers have been, the GMs, the Fords of the world, have been so desperate to keep their factories running to cover these fixed labor costs that they destroyed pricing. That's not happening anymore. Customers are reinvesting in the product. They're building their product pipeline. And the auto parts companies, in many cases, have begun to consolidate. They have better balance sheets. You know, as long as volumes recover, and I think they will in the U.S., it's going to be great for these auto parts companies.
I have a memory of a Delco plant. Miles of carburetors. I mean, it was self-owned within whoever, GM, I believe it. It was. The auto parts people today are global companies. I mean, we should not perceive Borg Warner as quaint Indy 500.
Exactly. There's been a much, you know, most of the car is produced by these companies. The car companies at the top of the pyramid, but 2/3 of the car is produced by these thousands of auto parts companies.
That's a break exclusive right there. 2/3 of the next Ford that we buy is by the parts company.
Exactly. And these companies have, because they have been less politically sensitive, they don't have the labor issues, they're smaller, they're more adjustable, and so there's been a radical restructuring. And even the big guys, like the Visteons of the world, you know, now have a footprint that covers the globe. They're not big, vertically integrated, U.S.-only companies anymore. They are truly global companies.
With your experience with Merrill Lynch and now at Guggenheim Partners, is the relationship between an auto parts company, particularly a smaller one, somebody entrepreneurial trying to gain another 100 jobs, is their relationship with the big three or the big five in America, is it contentious like we perceive Walmart and its suppliers, or is it more of a convivial kind of theme?
It's contentious, if you like. I mean, the fact is the customers are big and they're powerful. So the successful auto parts companies have proprietary technology and they have a strong share in a specialty. The big supermarkets of years ago that made every kind of auto part, they didn't get a lot of leverage with the auto companies. The specialists have the leverage. The Borg Warners, for example.
Bring up the chart on auto sales, if you would, here, Rex. You just had it up there. There it is. You can see it down here, John. A camera crew is so well fed by this time of the summer, it's hard to look around them because of the barbecues and the grills. Far, far from 17 million units. That yellow line, the average production, population adjusted. We go further here at Bloomberg Surveillance. Okay, so there we are. We got a long way to go, don't we?
Yeah, spending on automobiles, even though it's up a lot since the financial crisis, is extremely low. I think I've talked about this before, but over time, over 50 years, we've spent 3.7% of GDP on cars. In good times, 5. In bad times, 3. Right now, it's 2.7. So Americans have been very slow to come back to the market.
Will they come back?
Yeah, they will come back because cars are wearing out and they can't take the bus or the train.
You're a banker now. You don't do stock picks, right?
I was never any good at that anyhow.
Yeah, I thought you were lousy as well. It's good to see you with a different. What's the difference between being a sell-side analyst guy and being a banker besides fewer gray hairs and people throwing things at you?
Well, they're more the same than different, and my job is still to give clients objective advice. And how do we do that? We have to understand their business, their competitors, the industry, and it's just no way around that. And that's what I do.
I made a big deal yesterday of Alan Mullally's note to shareholders. Are you so quaint that you actually read the note to shareholders in an annual report?
I do, because I think even though the data is in the rest of the report, it does give you a sense of their state of mind, what they think is important, and the style of the CEO.
The style, I like that. That's good. Here's the style of our manufacturing economy. Down here, Mr. Casesa, you can see this brilliant chart. There it is, the nostalgia of a manufacturing past. Manufacturing is a percent of population. We know it rolls over. Unfortunately, it's getting near zero, but there's a renaissance. I don't see it in that chart. Is there a manufacturing renaissance?
Well, there is in the auto business because, in short, the industry's cleaned up its act. Some people did it the hard way. They went bankrupt and restructured. Others sort of did they did the easy way. They went bankrupt. They did the hard way, like Ford, and did it outside of court. But, you know, the UAW has done a deal with the auto companies to bring in people at lower wages, new people, so they're becoming more competitive. Right. And U.S. companies in automotive, aerospace, a bunch of sectors are still at the leading edge of technology.
Is Ford Motor penalized each and every day because they chose not to go to bankruptcy?
Yeah. Yeah, I mean, you know, they've had to use all their excess cash flow, a lot of it, to pay down debt, and so it has been harder. But you know, there are benefits to it as well. It's done a lot of good for their sales. It's done a lot of good for their reputation with customers.
Earlier this morning on Bloomberg Surveillance, my guest host Stephen Whiting of Citigroup, and I asked him if it's possible we won't see meaningful auto sales until the fourth quarter or into next year.
In this particular case where a natural disaster, a tragedy, has reduced production and the filling of sales, production is leading sales. And so it depends on how quickly that comes back. And when all those models are there, I think, again, it'll be shifted some to the fourth quarter. But I doubt that this is more than, second half of this year impact in terms of the major swing.
Okay, diet plan. Victor, run over here with your camera. Throw it up on this chart here. We're making Victor work today. 3 hot dogs, 4 hamburgers this weekend at one Sunday Grill. Too much information. Here it is. I love this chart. I've never seen it before. This is out of the GDP numbers, ECST Go on the Bloomberg. New orders, motor vehicle bodies. We're back to 1994. I had no idea under that series how far back autos have gotten.
Yeah, I mean, this crisis was so bad, it's like we went back 3 cycles. I mean, we gave up,
I like that.
25 years. So I think the way to think of it as an investor is that there's a lot more upside than downside because people aren't buying cars. And really the question is, what's the rate of recovery?
The rate of recovery, yes, but also, as I say there, depreciate this. It's a depreciable asset. We're not talking here about, well, I mean, a copper mine's depreciable, but over a long life. What's the car wear out now? What's the number versus what it used to be?
Well, a car probably goes 16 years before it gets junked. I think if you went back...
Where I grew up, it went 3 years because of all the salt in the roads.
So I think if you went back 40 years, say, to 1970, that number was probably 10. So cars last a lot longer.
Yeah. Let's look at equities. You're the banker here. There's another chart here, the Dow. This is the Ibbotson chart. We say that in honor of the great studies done in the last 30 years by Ibbotson and Associates. It's just the Dow, semi-log, slope matters. You can see the depression over there in the left corner of the chart. And up we go, and there's a flatness, and then up again, the boom, and the struggle we've had, particularly with the financial stocks. You are long autos, is clearly what I'm hearing about you. Are you long here? Are you long globally?
I'm long globally and I'm long here. And I'm long globally because there's a new middle class in China and India, and the numbers are spectacular. The total growth rate of auto sales globally now is 5%. For the last 10 years, 20 years, 30 years, it was 2. So the growth rate has more than doubled in the industry. We're at an inflection point. In North America, the reason to be long is we went down the most, and there was the most restructuring, and there has been, a real change in the cost structure of this business. So there's a big cyclical recovery.
Who has globally best practices right now? Is it BMW? Is it Ford? Is it somebody I don't know?
Look, BMW is great. Hyundai is on fire, and Toyota, even though it is suffering from many ills, is still positioned to be a global leader.
Never enough time. John Casesa, thank you so much.